The dollar, I have said, has a bull flag, and I've said this in my interviews recently. I've said this in my daily analysis videos. I've said this across the board. And look at the dollar starting to break out. See the bull flag, guys? That is a classic bull flag. 1, 2, 3, 4, 5, 6, 7. Again, notice how sevens repeat over and over again. This should pump you up because you have a discovery. When you learn how to find time counts, you have a discovery that even most institutions don't know. All right, this is something that, again, is so important to our daily lives. Understanding when breakouts can occur, understanding then taking the next step further to confirmation signals. It's freaking amazing. But look at the 3-bar surge and then the time count, and then here goes the breakout. Now, the breakout on the dollar is actually bearish for the stock market and for crypto.
Welcome back at Market Empire, your partner giving you your daily dose about the latest crypto news and thoughts of different analysts and investors. Watch it till the end of the video. Master trader Gareth Soloway is a self-taught technical swing and day trader. Yet, with over 20 years of profitable trading expertise, Gareth has provided investors with important tops and bottoms on the stock market, gold, silver, and cryptocurrencies. In this video, he would examine macro analysis, technical charts, and trade setups for equities, cryptocurrencies, and commodities. Soloway had previously predicted that gold would do so well, which it has, and according to him, it still has a considerable distance to travel. He said, however, that this does not preclude a pullback at some point, since this is a natural occurrence, especially when an asset has been overbought at some point.
We had basically zero interest rates. We had the Fed printing money. We had the government printing money and sending checks out. We had, people able to buy homes at essentially, 3% or under mortgage rates. We now have 7% mortgage rates for 30-year loans. So there's a lot of different things here that the markets are dealing with, which is why I would be very concerned. I would not buy into this is a repeat of 2021 in terms of the money flow that can go into stocks. And that even crosses over to something like Tesla. If we go to Tesla, Tesla had a great move and is continuing to have a nice little move. It's actually up pre-market this morning. But the problem is that you don't have the same financial conditions that you had when you were up at the all-time highs. So for me, we hit resistance. Look at this line right here. We hit resistance right here. We pulled back. If we make one more move up, you're looking for around the 222 to 223 resistance level. That is a very strong, this area, anything from 210 to 222 to 223, huge resistance. And I am a shorter. Absolutely, I will 100% short this thing. That is not even a question in my mind. I will absolutely continue to short it up here, expecting a bigger pullback. The pullback, when it comes in, not only are we going to go back and fill probably the 144 gap fill, but I still have it projected out that before this bear market is over, we will see Tesla down probably sub $100, maybe as low as $65. All right, so that's your Tesla analysis right now. Another stock that ran insane in 2021 and is having a big move is this chart of NVIDIA. Look at this upsloping trend line right here. That gives us a major level of resistance on NVIDIA. All right, so we're looking at NVIDIA with a potential upside max of 232 to 233. There is a gap fill as well right around 231. That is a level to short, in my opinion, on NVIDIA. NVIDIA, again, has earnings next week, I think next Wednesday after the close, if I remember correctly. So that should be very interesting to kind of come across. But again, that is a swing short in my book if it gets up to about 232 to 233. All right, next up, let's take a look at the chart of gold here. Gold is having a nice drop. Love the drop on gold here, guys. I've been saying it would pull back from when we were at the highs of 1950. Notice the parallel trend, right? Trend line here, matching this trend line right here. Where did price go? Right to that trend line of resistance. The chart was telling us that, again, we were likely going to see a pullback. Now, I've been a bull on gold going back to late 2021. I said it would be the best performing asset in 2022 compared to Bitcoin and the S&P. It certainly was. And I've said that it will be the best performing asset in 2023 as well when comparing S&P and Bitcoin. Now, that doesn't mean it's not going to pull back. So when I say it's going to pull back, it's not that I'm changing my mid to long-term projections. It's just saying that short-term, the chart was overbought, right? I mean, you were at the lows of this channel. You went to the highs. Well, it should pull back, right? I mean, that's what the chart's telling us. And the charts, by the way, are always right. My gut, my heart, my this, my that doesn't matter. The market doesn't give a crap about what our gut tells us or our heart wants. It does what it does, and the technicals get us through that. Okay, so the bottom line is, folks, here we are looking at a pullback on gold today. I do have a buyable level coming down here, and again, that buyable level around 1810 to 1800. That's a starter position. We're only basically we're only $20 away from that at this point in time. So 20 bucks more on gold, and I'm going to start accumulating my long positions again on gold. Natural gas had a big pop yesterday. It is pulling back today. We can see again another kind of big 1, 2, 3, 4, 5, 6, 7 move down on the intraday chart. For those of you that know the methodology that's taught here in the Winning Trader series, that tells us that that's a time count. We should see some sort of intraday bounce off of that. But the bottom line is we're still well above the lows from the last day or so, which were all the way down here. And again, look at that rally. Let's do a fib retrace here. Let's just see what the fibs tell us. I love fib retraces, folks. And if we take this low to this high, look at that. What's the fib level right there that the price literally went to the penny on? The 50% fib level retrace. So from the lows from yesterday to the highs of yesterday, the retrace is now a perfect 50% Fibonacci retrace. All right, and the reason why I like fibs, but you don't see me using a lot of other technical jargon out there, is because I like technical indicators that are naturally occurring, meaning that occur in nature. When you go in nature and you see something like a Fibonacci sequence occurring over and over in the rings on a tree or in the petals on a flower, that to me tells me that there is something to that and that we should be using it in our market analysis. All right, so that's what little tidbit there on the natural gas chart. I'm still bullish overall on nat gas. I still think it's due for a bigger run. If we look at the drop that we have seen on this, it did come into some major levels of support down here. We can draw a trend line right down here. You can see, look at all this support from right over here, and that again generally should dictate a bounce. Now we've had a small bounce, but really not much of a bounce here. I do think at some point we see a bigger bounce to the upside. We'll have to watch and see what crypto does. Right now, you still have a lot of money that's trying to rush into crypto. It's rushing into the meme stocks. It's rushing into the Teslas, the NVIDIAs, all of these it's rushing into. That's normal. That's a revisiting of or people trying to recreate the magic from 2021. As I explained earlier, remember, the 2021 magic is no longer there, not because people don't want it and don't will it and just dream about it, but because you don't have all the money in the system anymore. The money is getting sucked out. So that's one of the reasons why you have to be more careful with a stock like Tesla after this big run, and you don't want to be buying it up here, in my opinion. You want to be more looking to short these big moves up. Okay, where's the dollar going to go, guys? The dollar, again, where's the breakout going to go? I have a trend line already here. Look for upside to about 105.53, 105.50, we'll call it, on the DXY. That is going to be your resistance. So again, if the dollar goes up there, we know that the dollar has an inverse relationship with the S&P 500. We would expect the S&P to be down today. Is it down right now? The answer is yes. The futures are down. In fact, if I do a quick check on the actual S&P futures, we are currently down on the S&P futures 24 points. That's actually a pretty hefty drop. 24 points is a pretty hefty drop.
Gareth Soloway has presented a comprehensive study of the gold-dollar bull run, natural gas, and a number of other commodities. The master trader has adopted this astute strategy to ensure that most people can execute technical analysis on their own, hence reducing the number of people who make poor investing decisions. What are your thoughts regarding Soloway's technical analysis? Please let us know in the section below, and be sure to like, subscribe, and enable notifications for future videos. Thank you for watching.